Hello, everybody. Welcome to the Uncrackable Conversation, Episode 2. It's a pleasure to kickstart this conversation with some of the brightest minds in the industry. My name is Kapil Dhiman. I'm the CEO and co founder of Curanium, and I'll be the host for this episode. Please welcome Mauro Andriotto, Director, Swiss Innovation Hub, Jacob Stamler from Power Ledger, and Alireza Siadat from Deloitte. All three of our guests today have had a very diverse background, carrying decades worth of experience on their shoulders. So I'm going to invite them individually to share their background before we dive into the conversation today. Mauro, if I can request to start with you, please.
Thank you very much. Thank you very much for the invite. My name is Mauro Andriotto. I'm an adjunct professor in finance in Italy and Switzerland. I'm based in Switzerland. My background is between finance and innovation. I've been working with the European Commission since 2014 as where I've covered the role of jury member of the European Innovation Council. Right now, I'm working with the Swiss Federal Agency for Investment in Swiss, where I'm an expert and help the Swiss government to select the companies to be funded for different type of innovation, including clearly blockchain, artificial intelligence, mostly. Actually, that is my specific area. I am the director of Swiss Innovation Hub that helps companies to be funded, helps companies to build IT solutions, helps companies to incubate in Switzerland with different type of services. I am also partner of two family offices that are involved in venture capital investment. And so we work in conjunction with the Swiss Federal Agency for Investment and private partners to select companies and help them to develop the product. Last but not least, we have created a platform that is called a European Digital Asset Exchange that allows to tokenize financial instruments. Is perfectly compliant with the Swiss legal framework, and we are able to provide a primary and a secondary market. And right now we are tokenizing different type of instruments, shares, bonds, and also golds from Ticino refineries. As you probably know, Ticino is very famous for refinery of gold. Thank you.
Thank you very much, Mauro. Jacob, if I can invite you, please.
Yeah, I don't think I have as long of an introduction as Mauro did, but I lead the blockchain operations at Power Ledger. At Power Ledger, we built infrastructure for decentralized energy systems. Outside of that, I also contribute to kind of global policy frameworks as a member of the United Nations Commission for Europe, the Task Force on Digitalization in Energy. And generally, my focus is really just on bridging the gap between blockchain or generally emerging technologies, real world impact. And so I see how AI, quantum, blockchain, and all of that work together in the real world. And so my goal for today in general is just figuring out how we can build systems that are secure, scalable, and sustainable.
Thank you very much, Jacob. Alireza?
Hi, everyone. Thank you, Kapil, for inviting me today. I'm jumping in for my dear friend Magnus, who's ill today, but I'm happy that I'm here with Mauro and also with Jacob to share this roundtable. So I'm Alireza. I'm the lead for blockchain and DLT within Deloitte Legal. I'm located in Germany, but I'm taking care of Europe and the German-speaking area in Europe, as well as the Middle East when it comes to blockchain and DLT. Besides that, I'm also co-publisher of Wolters Kluwer Journal on the digital economy. I was quite active for the past years, starting from 2014 already in blockchain and DLT with different think tanks, like with the Think Block Tank in Luxembourg, where we published the first token regulation paper. And then we also founded the European Commission's Blockchain Association in NATBA, where I was a board member for a long time, and also a member of the MiCA task force, which is the market and crypto assets regulation. helping them to set up the first draft of that. And yeah, I'm helping banks, fintech, startups, different players in the field of cryptocurrency, but also tokenization, and helping them to do projects supporting different players within Europe and also outside. So happy to be here today.
Thank you so much, Alireza. And once again, welcome to all three of our guests, and thank you so much for taking out the time. Looking forward to an interesting conversation today, where we are going to dive deeper into blockchain, quantum, AI in its independent capacity, as well as the convergence of these three technologies, and double-clicking on European and the Swiss ecosystem, where we are seeing a lot of new developments happening recently. But before we start, I want to give a big shout out to our media partner today for this edition, Bitcoin.com. Thank you so much for the support that you provide. And with the support of Bitcoin.com, this episode is going to be watched by millions of people live as well as after the recorded session as well. With that said, kickstarting the conversation, Alireza, with you, I would love to start by a term which has really been talked about and discussed in the media a lot these days, MiCA. So if I can invite you to share, what is it and why should the industry care about it?
Yeah, so in a nutshell, MiCA stands for the harmonized regulation of crypto assets within the European Economic Area, which is Europe and all the other member states as Liechtenstein, Norway, and also Iceland, where we have now from this year a harmonized regulation when it comes to crypto assets. So anything which is not a security and which could be a monetary value stored or transferred on DLT or similar technology is now regulated under the so-called MiCA, and which is very interesting because we have in MiCA two aspects. We have one side which is the stablecoin regulation, so everything related to e-money token and asset reference token is regulated, as well as other token. And other token, we understand cryptocurrencies and utility token. Also, NFTs are covered as long as they're not truly non-fungible. They're also covered by MiCA. So anyone who wants to provide services to crypto assets to the European Economic Area needs a license, and anyone who wants to issue a token and wants to offer this token to the European investors would need to have a white paper, at least when it comes to cryptocurrencies and utility token. When it comes to an e-money token like Circle, like products similar to the USDT, would need to have, besides the white paper, also a license, an issuer license, which you can also find on a registry which the European regulator and also the national competent authorities, such as in Germany, BaFin, is listing on their public available register. So much to that. Just keep in mind, if you want to provide services or issue a token to Europe, you need a license or a white paper.
Now, the reason I asked that question, Alireza, thank you so much for explaining it in detail, is last month I was in Riga, Latvia, for a conference. And the moment I entered there, Magnus, who's kind enough to invite you today, I received the first threat from him saying that you ideally cannot be present here without taking care of MiCA. And I was just speaking at a conference. I was like, is it that serious? He's like, ideally speaking, if you have to be too technical, the answer is yes, because you're representing a project and it is in Europe. We have to be really taking care of the MiCA regulations as well. Now, as a builder, the first reaction I had to that was, is regulation actually supporting me, or it is becoming a hindrance for me that even if I have to be present in the European region, do I have to be really, really cautious about the regulation even before, setting up any business there, making any revenues from there or anything? So from a builder perspective, and Jacob, I would like to have your views on that. From a builder standpoint, how do you see regulations in general, and if you have a specific point of view on MiCA as well?
Yeah, so I think thanks for the question. I think there's two sides to this. We cannot deny, as people building in the blockchain space, we cannot deny that crypto has been vulnerable, especially when it comes to custody, market abuse, and general disclosure questions. And any form of regulation, be it MiCA or any other alternative regulation in other jurisdictions, is good in that regard because it really helps with consumer protection and general, like with market integrity. But everything goes so far. So I would say to your question, is it good or bad? Is it an enabler or constraint? I would say it's both. It depends. I know that's a boring answer, a very consulting answer, but I think that's really the case here, because on the one side, it really provides that clarity that is really important for institutional adoption, and only through institutional adoption, our industry will eventually gain the size and scale that we're aiming for it to have. But it also really constrains innovation. Like if you as a company first need to think about getting a license before actively trying to build an MVP, that just like it hinders you, right? Because there's also massive costs associated with it, legal advice, getting licenses. And as a founder at heart, or a builder at heart, like the only thing I want to do is just go out and build and then figure out along the way, as long as I adhere to some core principles. And I think we also need to be aware that in other jurisdictions where you don't have these and I call it overregulation. I don't necessarily think MiCA in its current form is an overregulation. I think MiCA 2 is probably going to be an overregulation as soon as it comes to it. But we have to think that other places that don't have that, they will innovate faster, they will build faster, they will take leadership in these areas because they're allowed to make mistakes. Yes, there's going to be potentially more scams, there's going to be potentially more risks for consumers, and maybe less trust from institutions initially. But we see it in other jurisdictions. It will come. Like as soon as it grows, as soon as it picks up, the institutions will come because they want to have a part of the pie. The regulators are going to profit from it as well. I mean, we see stablecoins being a big narrative in the US. Obviously, Tether being the largest or one of the larger buyers of treasury bonds in the US. So there's like a de facto effect on the bond market for the US treasuries. So there's a benefit from being more lenient, especially in the initial stage, giving a place to grow, and then regulating where regulation is needed. I think the Swiss approach, I don't know if I'm not going to go too much into it, but like the principle-based approach where you just have, how to say, you basically have not really you have a technology neutral approach. So you basically just have laws that apply to the existing financial markets that will then also be applied to crypto in that regard. And it's really a case-by-case approach, where you don't overregulate initially, but you look at a situation and then regulate based on what's happening in the market. And I think that that's like the middle way, or the split between having no regulation and having too much regulation, is something like the Swiss approach. That's why I like it.
Yeah, and I totally agree with that. And Mauro, from your perspective, wearing an investor hat, how do you see regulations interplaying with the builder mindset, or what advice? What do you look at when you're putting a check into a company, and how do you expect them to operate? More regulatory friendly, more. I'm asking a very difficult question, I know, but is it more regulatory friendly, more aggressive in terms of building and balance it out with regulation? And how do you see the comparison between the Swiss ecosystem and European region at large?
Yes. Well, I think that if we compare the European regulation to the Swiss one, we can even say that Europe tends to over-regulate the sector. The Swiss regulation is very easy, very simple, very clean. There are just three types of token: utility, cryptocurrency payment token, and security token. Security token, as in Europe, they are regulated with, let's say, all the laws of financial markets. So if you have a security token, the regulator, both in Europe and in Switzerland, says, okay, you have a financial instrument, so this is going to be regulated with our laws that are already regulating financial instruments. If you have a crypto, a payment token in Switzerland, then let's say that the only real law that is applying is the anti-money laundering. So It's like if you are offering a payment system to the public, so you need to register yourself with an SRO, self-regulatory organization. You need to do KYC, AML, and that's all. And if you have a utility token, and this probably is the huge difference between Switzerland and Europe. Actually, Switzerland, there are no, let's say, obligation for the issuer, because it's like if you are selling a pair of shoes. It's a utility, it's a service, it's a product. So there are no really obligation. In Europe, they have regulated this issuing, let's say, similar to a financial instruments that is under 8 millions. In Europe, when you are issuing financial instruments, but you stay below 8 millions of capital raising, you need to publish a prospectus that is not going to be, maybe prospectus is not the right word, because prospectus usually is authorized, but you need to publish an informative memorandum for your investors. That actually is very similar to the white paper. So I mean, before answering to the second part of the question, what I'm asking to myself is really the issuing of a white paper protecting investors and the ecosystem? I mean, I'm not sure about that. Time will tell. But what I can say that, if I'm not wrong right now, the regulation that we have in Europe is one of the heaviest of the West countries. What we are going to look as an investor, well, usually we tend, an investor in general tends to look to a project under a jurisdiction that he knows. So let's say that even if you have the most beautiful project, the best idea on the market, and I wanted to invest in your company, I wanted that your company is placed in a jurisdiction that I know. So usually we have the family offices in Switzerland that tend to invest in Swiss companies, and if unless that we are talking about IPOs or pre-IPOs companies, that really the logic there is different. But if we are talking about startups, there is that, let's say, correlation between the companies in the country. Also because in some areas, above all in Europe, there are some fiscal advantage for the investors. So, for example, in Italy, we work quite a lot with also the Italian National Agency, that is Italia. There are some good opportunity there for startups. They are trying to attract the startup. There are tickets up to 1.5 million where you can really get a very good seed financing. There are advantages if you are a resident in Italy and you are investing in startups. So usually there is this connection between the residence of the investor and the jurisdiction of the company.
Interesting. And now, if we zoom out a little, right, the industry that we are talking about, blockchain and emerging, converging with the other emerging technologies like quantum and AI, it's really, really global. And there are now with US coming up and trying to become the crypto capital of the world, and they're investing heavily into these infrastructure technologies that are going to be supporting it. China have started investing in, where they started investing in quantum much earlier than anybody else, and now the APAC region is also picking up. So it's a very global play. So it's not just companies competing with other companies; it's countries also competing with other countries. So in a landscape like this, where the winner takes all approach is classically what's happening. Like when you get a larger share, the entire economy starts to progress and flourish. When we are operating in an industry like this, how do you see the landscape beyond Switzerland and Europe? And is there any kind of a specific learning? Reza, I'll start with you as a consultant. I'm sure you get to interact with clients who come from different jurisdictions. And the first question that they would ask is, why should I enter this region and not some other region? Right. So what kind of an advice do you provide them if the focus for them is growth and market share, and everything else comes secondary? And I'm speaking as an entrepreneur. To me, the most important thing is building a product, getting the market share, and growing the ecosystem. Everything else has to marry to it. So when you get clients like this, and we have spoken about MiCA, we have spoken about the Swiss regulation, but I want to now take it global. How do you see the landscape outside these two regions, and what kind of advice do you pass on to your clients?
That's a very good one, and that's what I'm dealing with for the last 8 till 10 years. So before I was with Deloitte, I was the head of the crypto initiative with PwC Europe, where it was before 2018, so it was before the regulation was there in Europe. So, and in most cases at that time, I was advising my clients to go to Switzerland, to look into Gibraltar, to look into Malta. So if you remember back in 2017, Binance came. So I was also working with Binance from the beginning. And Binance, I think, is the best case of fast growing and fast covering the market, as you just said, Kavir. But you can see now what kind of disadvantage Binance has of doing that. Of course, they're the biggest market share when it comes to crypto exchange trading, but they're facing different charges with different jurisdictions trying to cover up the AML and compliance issues. Therefore, it really depends what kind of strategy you have for the next 5 till 10 years. Yeah? If your goal is to grow fast, and let's say you're on DeFi. So I have a client which is in DeFi, and they told me they want to stay in DeFi, and they were asking me to get the license in Germany. And I told them 5 years ago, don't apply in Germany. Stay with your SRO, which is a self-regulated organization in Switzerland, and build up your headquarter maybe in Dubai. So at that time, Dubai did not have the strong VARA regulation as they have now. The IFC was just putting up the crypto regulation for the Dubai region. And I told them to look into Dubai, and they did it at that time, and they're now in Dubai, and many other crypto players followed. And I would say Dubai and also Abu Dhabi with their ADGM regime, and now also Qatar and even Saudi Arabia, they're very strong when it comes to building up an ecosystem for the crypto players with heavily support of the government, financial support. But if you want to target retail, the retail market in Europe, you must have a license in Europe. You cannot be located in Dubai or in Abu Dhabi and apply for a license in Europe. You must have a physical presence in Europe. You must be registered with a company in Europe. So, but if you say on the other hand, I'm not targeting the retail market. I'm fine with B2B, like other players are doing, Backpack, Bullish, and other bigger players. You don't need a license in Europe. You can stay let's say in Dubai. You can apply for a bar license and then fully rely on so-called reverse solicitation. So you have your web page in English, and everyone who wants to work with you is approaching you. You can do that from there. So the question in the end of the day is, what do you want to achieve for the next 5 till 10 years? What is your ultimate goal? And according to that, choose the location. Choose a location where your investors are comfortable. Choose a location where your tax environment is fine, and maybe choose a location where you can onboard your clients in the best way. When we think of KYC and identification on how to do that, so this goes in one hand. So not look just at one aspect, but look at the overall picture.
That's a very interesting point, Alireza. And because, the way you brought in a complete contrast geography like Middle East compared to Switzerland and Europe that you're talking about, and it leaves a lot of impressions about the mindset of the leader of the country from a political standpoint as well. When we look at Dubai wants to be the world leader and like really grow much faster. And we have seen over the last decade the speed at which they have grown. But at the same time, when we look at Switzerland, they are much more, they take their time. It's not that, okay, we have to compete. And that's where, Mauro, I want to bring you in to have your point of view on that specifically, and maybe your 2 cents on comparison between the Swiss ecosystem and the Middle East ecosystem. But a rather detailed response. You made a point in your introduction that you prefer to invest in Swiss-based companies, right? And that's very natural as well, right? Some investors which are geography focused, they invest in companies which are located in that geography. My question is, why so? Because the technology that we are talking about on this panel today is global. The growth is global. The consumers is going to be global. But still, from a legal standpoint, why is it that we prefer a Swiss company to be invested in versus any other geography?
So we start from the second part of the question. The reason is very simple because when I invest in a company, then there is a set of rights and obligation that I'm creating with that entity. And I wanted to be clear. I want to know very well what is going to happen if something is going wrong. And I wanted to know the jurisdiction very well. I wanted to know how the court is working. I do not want to have, in case something is going wrong, a huge cost in legal fees. If I am based in Switzerland, I probably already have my legal partners in Switzerland. If I have to chase an entity that is somewhere else because they are not respecting my right, probably I would need to hire a lawyer there. Maybe the legal system in that country is very slow. Maybe the rights is not so strong as in the original country where the investor is based. Usually, Switzerland is seen a perfect country for this type of protecting the right, protecting the intellectual property, protecting the right of the investor. And this is probably also one of the point of the other part of the question. When I'm looking for a country where I want to base my project, one of the things for sure, maybe one of the most important is the regulation. And in my opinion, right now, Switzerland has been the first country in the world to have regulated clearly the crypto industry. And many of the other countries around the world have tried to copy the Swiss jurisdiction. Let's not forget that, for example, when Facebook was trying to create a cryptocurrency, they based the company in Geneva, that the Ethereum Foundation is based in Switzerland. I think this is not happening just by chance. Another thing that is very good, it's about the political stability, the fact that is a very democratic country where there are no preferences of any type. There is just the law, you follow the law, and you can be very sure about your rights and obligation when you sign a contract. Another thing where there is a clear advantage is compared to Europe, it's about taxes. In Zug, for example, you can have around 10-11% tax rate for a company. Right now, they have decreased the tax rate also in Ticino, where you can get up to 15%. That is one of the lowest in Europe. Another point that I would consider is the presence of investor, and clearly Switzerland is very strong also into this field because there are a lot of family offices. Family offices are very smart and they have started to invest in cryptocurrency. So you find an ecosystem that understands what you are talking about, usually, even if you have something very innovative like blockchain, cryptocurrencies, or artificial intelligence. And I think the real strong point in favor of Switzerland is the easiness with which you can speak with the authority. Uh, I, I'm not lying, but I have the phone number of some of the lawyers at FIMA, and clearly for the projects that we have had, we can have a really clear and direct communication with them. If something, if you do not understand something, if something is not clear to you or to the project, you can call the lawyer at FIMA. I mean, I come from Italy, and I can tell you that having this type of relationship with the authority, it's really an advantage because In Italy, for example, it's impossible for you to speak with the market authority. You need to follow a very systematic procedure. It takes months to get an answer. So this is, I think, the really strong advantage. On the other side, I could say that clearly, if you want to enter in the European market, if you want to sell your token to the European retail people, you need to abide to the European regulation. So I think that a good strategy could be to incorporate in Switzerland, and maybe later when you are ready at a certain point, you apply for MiCA in Europe, or you try to use a reverse solicitation. Also Dubai, for sure, it's a very good, let's say, option. Clearly is much more far than Switzerland for people that are in Europe, because then it's not just about putting your project in that country. You need also to put a company in that country. And when you put a company in Dubai, we know that in order to open a bank account, you need to have a visa. In order to have a visa, you need to visit the country. You need to have an office. I mean, it's something that you have to consider before going there.
Understood. And Jacob, I would like to invite you now. We have heard the lawyer and the investor. Now, from a builder point of view, how do you see these things coming together? Plainly, as an entrepreneur who's interested in building a technology and taking it to the market.
I think as a builder, you have to, it's a multivariate equation, right? There's a few things you have to take into consideration. On the one side, you need to go where your users are. With most of the products we're talking about now, the users are globally. So you don't really have to go anywhere, particularly you can sell it from anywhere. The second question is, where are your builders? Where are the people that help you build what you want to build? Generally now in this day and environment, most people work remotely. Like most of the companies that start now have remote workers. So you also don't really have to go to the people. The talent will work from anywhere in the world. So then the last kind of question, of course, the legal side was discussed. There's obviously legal advantages for choosing certain jurisdictions over others. But then the third question you would ask yourself as a builder is, where's the money? Well, most of the money, if I wanted to start, and you see that maybe less in crypto, but more in AI, all of the talented teams go to Silicon Valley. That's where the money is. I have a bunch of friends from ETH Zurich. All of them moved to the US to build their companies, even though they started building them here, because that's where the big money is. And that's where the check sizes are generally bigger. You can raise money in Europe. I'm not saying it's a problem to raise money here. It's just, it's much more of a spray and pray approach in the US than it is in Europe. They're much more looking for the high return tickets. So they're ready to give you a higher amount initially and take the risk of you just failing entirely. Whereas in Europe, it's much more of a reflected investment cycle. It's longer discussions. They want more proof of concepts, more product market fit metrics. In the US, they invest in a team most of the time, let's be honest. And especially in the early stage of being a builder. I think these are things that you need to take into consideration. And so you have to really look at the different sides of it. I think what Mauro mentioned with Ethereum is a very interesting case, because Vitalik has been very transparent about his decision to open the Ethereum Foundation in Switzerland in 2015. He's taken a few months off and traveled the world to find the right place to start this project. And he very openly said that Switzerland was the only place where regulators sat down with him, but they didn't just sit down with him. They actually took time trying to understand something that nobody else would understand. Because what he was building at the time, a smart contract platform, was nothing that anyone has ever really heard of. It was unique in its entirety. People knew a little bit about Bitcoin, just like digital cash and this, but like a smart contract platform, all on all on blockchain rails, was like a novelty. And they've taken the time to try to understand what these people are actually building, and they've tried to go to them. And I think that's the real benefit that Switzerland has. Also, due to its size, you can get to people faster, and they're willing to listen. And we've always had this. Yes, we have a general principle that we set as a guardrail, but after that, we'll look at a case by case scenario. And I think that's what made them settle here, and that's what pulled a lot of other people in. And I think we also, the last thing is important to know, that there's not going to be a full centralization in that regard. There's always going to be different hubs around the world. Like Dubai has its validity, Singapore has its validity, the US has its validity. As a crypto founder, would I go to the US? Probably not. The environment right now is really good, but what happens if there's a new government? You see, like, things can change really fast. In Switzerland, things aren't changing very fast. Even though we're small, it takes a long process until people vote on it, until new regulation is being passed. In Europe, it's even slower, and there's no real way to shape governance in that extent. You have different countries, different stakeholders that are interested mostly in protection. That's their main goal, which I understand. As a country, like, that's your main goal, is protect your citizens, protect your companies. But like, as a builder, you want someone that is also listening to your pains. What are your pain points? How can we as regulator also find a balanced way between the companies and the users at the end, so that both have an environment where they can grow and be safe as well? And so I think finding that balanced approach, you need to look at all these factors and choose the place that is right for you. I don't think there's a place that is right for everyone. I think I think everyone has a place that is right for them, but it's not necessarily the same place.
I love the way you put that. Alireza, any comments on that piece?
Yes, I mean, what Jacob just said is absolutely right. There's not one country where you can say you should go there definitely. But what I want to highlight is, I said it before, until 2017, 2018, I was advising my clients to really look into Switzerland. And if you think back, in 2017, FINMA, the Swiss regulator, was the first regulator globally which gave some guidelines on how to categorize the different three token types. But to be honest, also, ever since like 2018, 2019 till now, I didn't see that much founder friendly regulation and guidelines coming out. I can give you like 3 examples. If you look at the staking regulation paper, which the Swiss market brought out, it is very critical when it comes to staking. It really brings some developers which are really relying on staking being baffled on what to do when it comes to staking in Switzerland. When it comes to the application of the so-called travel rule and the change of law in Switzerland when it comes to from which amount do you have to apply a fully compliant identification with KYC rules, and also in respect to Bitcoin ATMs or ATMs in general, also the market was very baffled. So when my clients now ask me which jurisdictions to look at, Switzerland is not the top of the list for me. I mean, you can achieve the same thing which you just said, Jacob, and also Mauro, talking to the regulator and having really a direct conversation line. You can achieve that in Liechtenstein much better, and Liechtenstein has a difference towards Switzerland, that it's a member of the European Economic Area, so you can make benefit from both sides. On one side, having like a small environment and having a developer builder friendly environment, and also having a very good relationship to Switzerland, by the way, because Liechtenstein and Switzerland have a bilateral agreement, but also being a member of the European Economic Area and making use of the MiCA. So, there are other jurisdictions which are similar to that. I don't want to go through all of them, but what I want to say is I want to double what Jacob said. You must really look at what is your business. If you're like a pure developer, like a protocol developer, and you're doing something like Chia is doing, or some others like PIF is doing, who really look into Switzerland and which really makes sense, yeah, go for it. But if you want to do something different, have like something more commercialized business, then look left and right, and also what you said, Jacob, finding the right investors with deeper pockets. Absolutely with you. US is a perfect fit. But does it really mean that your company has to be set up, let's say, in Delaware or in the US? Or maybe the investor says, okay, you should choose a jurisdiction which is maybe from a strategic perspective clear for the next 5 years. Plus, it allows the investors maybe to make some benefit when it comes to taxation, as you said, Mauro. So all of that has to be put together to think about, and then you can choose it. And as you can hear, I'm not an advocate to say you must go to Germany. Maybe Germany is the right jurisdiction because you want to really target the biggest economy in Europe, which is the biggest economy in Germany. Maybe it is, but maybe it's not Germany and it's some other jurisdiction. But I wouldn't just take one or two countries. I would really say take a list of 10, 15 jurisdictions and really look what is the best. And what is very important, discuss it with your angel investors or with your core investors. If they are fine with you choosing this, if you're in a position to choose the jurisdiction where your investors are fine with it, do that. Because if you need the next bridge finance round, if you need the next financing, your angel investors, your core investors, they will stick to you, and they will most likely stick to you if you listen to them and do what they say. Then choose something and afterwards go to them.
Interesting. Mauro, on that note, to be very specific, deployment of capital from Switzerland versus deployment of capital from US. What's your take on that?
So there is a big difference between Europe in general, not just Switzerland and US. And we have two completely different models. The US model is a private model, is based on venture capital that are really doing the venture capitals. That it means they are really keen to take the risk with you to develop the idea, the expansion of the company, and to get during the expansion at an exit, usually with a private equity or an IPO. The private industry, the investor industry in Europe has not ever developed a private sector. I mean, we have a venture capitals that wanted to invest, but without really the risk of being the venture capital. So they ask you lot of proof before investing. They want a commercial proof, they want an MVP, they want this and that. So they are not really taking the risk that usually takes a US venture capital. This is why the public sector has created some solution through the grants. And the grants are available all over Europe, both at the national level and both at supranational level. That means European Commission. Actually, just an interesting thing, if you go on Crunchbase and you check who is the number one investor in startups, is not a US venture capital, is the European Commission. European Commission has been investing from 2016 to 2020 with the program Horizon 2020, and now is investing with Horizon Europe. And there is a specific program for startups that is called European Innovation Council Accelerator, where, just to give you an idea of the size of the program, Horizon Europe is a 95 billion program. It's not related just to startups, but is funding innovation, and is funding innovation at all the type of levels, university level, startups, private, public, big corporations. So why? Because the investment in innovation in Europe are usually very low compared to the US market. And when the private sector fails, usually the public sector is trying to help or trying to support in order to get to that cause. But I would add another thing that during the last years we have another huge competitors, that is China. If you see the number of innovation TikTok and Alibaba and giants that are growing. DeepSeek, just to give you another name in artificial intelligence, the number of giants that are growing there, I mean, it's something that we should think at, because China is even another different model. China, it's a mix of Europe and US. There are both grants and there is also the private sector. So, I mean, it's like a complex landscape, and probably it will get even more interesting in the next years.
Got it. Thank you so much, everyone, for sharing this perspective. And I think on that note, I would like to reach the conclusion of this discussion, inviting each one of you to share concluding remarks. Alireza, from your side, as a lawyer, and this is like the concluding remarks I would request you all is, if you had to give an advice to a young founder building in our industry, and what advice would you give? Alireza, as a lawyer, Jacob, as an entrepreneur, a fellow advising a fellow entrepreneur, and Mauro, as an investor. So these three takes, if we can pass on as an advice to a young entrepreneur entering this space who wants to build a global business in our industry, what would it be? Let's start with you, Alireza, please.
Yes, I think you should not invest too much in advice in the beginning. There's lots of things which you can do yourself. What I'm saying of do yourself, everyone can use ChatGPT or some other large language model tools to do some research on which jurisdiction is maybe the best fit for your business. But if you do that, try to think not just for right now, try to think for the next 3 to 5 years. Try to put up your business plan, and the business plan should not just cover the financials, but also should cover what are your target key points you want to achieve in the next 3 to 5 years. And then make a pre-selection of jurisdictions where you're interested to go, put some pros and cons, put it together, discuss it with your advisors and with your investors, and then get some budget and really get some advisors for yourself for this project, and then choose it and go for it, instead of asking this question for the next 3 years.
Thank you. Jacob?
I think there's currently, in today's world, like every founder faces a three-way trade-off between like neutrality, incentives, and scale. And you're gonna have to choose two. And I think most founders choose incentives and scale. So where's the funding, and where can I grow? And I think that's good, and I think that's the right choice, and you shouldn't be afraid of making that choice. Focus on what you want to achieve. I think you'll learn on the way. Slightly different advice to Alireza. I agree. You don't need to spend too much on advice, but you can never overspend on legal advice and on accounting. If these two things you have to figure out from the beginning on, that is money well spent, because you'll end up in situations otherwise that are very, very difficult for you to maneuver yourself out of. So don't go cheap on that. Rather go cheap on a website design or graphic design or anything like that. These things can be fixed later at a much cheaper cost than having to fix some form of accounting mistake that you've made very early on in your founding phase.
I completely second that thought. Thanks for sharing that, Jacob. Mauro?
So sometimes I see funders that are really focused on getting a venture capital. That is fine, and it's something that maybe venture capital, family office, and institutional investor is something that can be found if you have a smart idea, if you have a very good material, if you can really show the value of what you are building. But I think that sometimes funders, they are not really researching that there are other opportunities that are grants from the government, grants from the European Commission. And in some cases, there are the probabilities of being funded with grants and that type of initiatives. It's much higher than the probabilities of getting a venture capital. So in my opinion, when you are looking for capital, you should not close any door, any opportunity, because there are lot of opportunities that you can get, and sometimes there are even no repayable, no refundable grants. So it's free money, and why not trying to get that and focusing on getting a venture capital that will enter in your governance, that will ask you many things. This is just a suggestion.
Thank you very much, Mauro. And thank you, Alireza, Jacob, Mauro as well, for taking out your time and sharing this amazing insights today. I'm sure the listeners and the viewers loved it. They would have taken a lot of notes while you're explaining things. It really adds a lot of value to the ecosystem. I really appreciate you taking out the time. And to our viewers, thank you so much for tuning in. This was the Uncrackable Conversation. See you next month again for episode 3. Stay tuned. Thank you.
Thanks, Kapil.
All right, take care.